So you're interested in looking at a manufactured home, and maybe you have found the perfect lot where you would like to put one. How do you figure out how you can buy the lot and buy the manufactured home and get it all put into place on there and have your long-term loan? This is where the one-time close construction loan comes into place for a manufactured home. I'm excited to show this to you. My name's Miles Pitcher. I'm the owner of Superior Lending, licensed in multiple states. We've been in the business for quite a long time now, since 2001. So if this is your first time checking out info on manufactured homes, I have another intro video that I'll put a link to. Check that video out. It has a lot of great info on understanding some of the different programs and guidelines that are available. But we're going to specifically be looking at the one-time close today. So let's jump into this. By the way, give me a thumbs up and a subscribe on this if you can. It helps me out. So thank you. So first of all, the one-time close, what it does is it takes the lot loan, the construction loan, and the long-term financing, and it puts it all into one loan. Lots of advantages with that. Some of them is that it really is designed to simplify the process. You get to purchase the lot and the home at the same time. Or if you own the lot already, you can use that also. One of the major advantages is there's only one closing. So you only have to pay closing costs one time. Whereas if you did a construction loan, you would have to close on that, fund it with closing costs. And then when the home's done being built, you would have to refinance that into a long-term loan and pay closing costs again. So there's an advantage here. We primarily do these manufactured homes on FHA loans. The VA loan is also available, but we're going to specifically talk about FHA today. There's no payments required during the construction period. And the cool thing about this is you can get into it with as little as 3.5% down payment, which is phenomenal. The other cool thing is you only have to qualify at the beginning. Once you qualify for the one-time close and you close on it, you don't have to qualify again once the home is finished being built and put in place on the lot. There's 15-year, 30-year rate options available. These are fixed rates, and that's a good thing too, is that you can lock in your rate and have that in place if there's a fear that rates are going to move up on you. The other cool thing about an FHA loan is once you've had that loan, made 6 payments on it, we're able to do FHA streamlines for you, which allows you to lower down your interest rate if they are lower. There's a minimum requirement of at least 0.5%, and we get to do those at a very, very low cost to you. So the closing costs are not significant at all. All right, eligibility. So the builder needs to be a general contractor also. The borrower, you have to buy the land or own the land already. And you may have a loan on the land. If that's okay, that'll get paid off as we close the one-time close. At closing, the funds are dispersed to cover the purchase of the land. The rest of the money is held in escrow for draws from the builder contractor as things progress along. So we work towards getting the certificate of occupancy, and this amortization of the permanent mortgage begins no later than the first month following 60 days from the final inspection or issuance of the certificate of occupancy. So that basically means when the home is finished, that's when the amortized loan begins automatically at that point. Loan amounts vary by location. And look at that, we can go all the way down to a 620 FICO score. That's one thing we love about FHA loans. So here's the process kind of just in general. So first, you need to get pre-approved. That's where you start with me, making sure this fits. Then we get in touch with a manufactured home builder, general contractor, and we make sure that they're approved with our lender. If they're not, we go through that process. At the same time, a lot of times you'll be looking for the right lot and place to put your home. We get that chosen, and then the whole package is put together to send to the lender, which includes the cost to purchase the lot and for the home. The lender will underwrite the file. We'll have it underwritten. It will go through some different, we call it conditions, or where they ask for more info. There's a 5% contingency built in. That's typically what it is. It may or could be higher than that, but typically it's 5%, and that's added into the loan. Then we get clear to close, and you close the loan. You will go on title and be the owner of the property at that point. Okay. And the lender's lien or mortgage is on the property. Remember, you're not making payments during the construction period. Once certificate of occupancy is issued and you can move into the home, then you'll start making payments within 60 days after that point. And then, yeah, the construction goes on. I want to reiterate that this is seamless flowing from the construction into the long-term loan. You don't have to do anything. You don't have to do a whole nother loan. So that's one of the things we love about this. If you have any questions, please feel free to reach out. We are happy to help you on this. This is a great product to help with some of the affordability issues we're facing right now, where rates are and home prices are. My name's Miles Pitcher. I own Superior Lending. Have a great day.